Hey, good morning, everybody. It's Brian. Today is Tuesday, the 28th of July, here for just a quick update. What are we looking at? What are some trade ideas? What are some key levels to consider for the day? So let's go ahead and jump into it. We're going to keep it pretty quick this morning. I'm not going to spend a whole lot of time pontificating about, well, maybe I will, who knows. I usually just start talking and figure it out from there. But ultimately, we're going to have a quick look at what's happening in the forex markets, what will be focused on as the U.S. session begins here in about 10 minutes. About 10 minutes, 12 minutes from now. And then we'll pop over, have a look at what's going on in the futures market and some trade ideas there. And then if we have time, we'll hit crypto. There's not a whole lot going on in crypto. Crypto's been moving. It's been moving like gold, which is great. But anyway, well, let's go ahead and get to it and go ahead and kick things off right over here on the... let's talk about the news. We've got some news coming up today. It's not super high impact, but it could certainly be market impactful. If you've been watching last couple of days, last week really even, we seem to have kind of stalled out on that massive bull run that we've had in the S&P. Seems like we're just kind of hitting a level up there and is having trouble moving higher. It could signal potential for a reversal. But again, we don't trade based on what our emotions say or what we think is going to happen. We always keep things to a dedicated plan of, if these things occur, then we'll take this action. We only take action when things line up with our planned idea. Anyway, with that said, there is some news coming up that could be impactful. This is the home price index that's coming up at 8 o'clock. Central time, which is 9 o'clock Eastern time. And then we've got consumer confidence at 10, along with the manufacturing index. While these reports by themselves, are medium and low impact, they could be a bit of a catalyst in an already uncertain marketplace. So keep your eye on that. If things occur there and start moving, that will impact the US dollar over here in the forex side of things. It'll also impact us from an index side of things, usually inverse of one another. So ultimately right now, when I look at what's happening in forex and kind of how things are moving and just do my homework leading up to that 8 o'clock Eastern open time, I'm looking at what currencies have moved, number one, what currencies are actually moving. But then number two, I'm also going through and I'm just quickly scanning, how currencies have moved for the day, what's their current range, and how does that compare to their typical range. So I can see, I can narrow it down pretty quickly to see which currency pairings I'd like to focus on, given the fact that, focusing on the ones that have moved a smaller percentage of their typical range. Now, I know I repeat this every time and probably I say it every day, but I just want to reiterate, just because something has moved the same distance it typically moves, that doesn't mean it can't continue to move further. If there's some catalyst behind, what's causing the heavy buying or heavy selling on a certain currency, it could continue on for days and be far outside of what its typical range is. So everything we do in trading is based on filters. How do we filter the market? And then it's based on historical data around, what typically happens around certain occurrences, so on and so forth. Just because something happened historically doesn't mean it's going to happen definitely in the future. Everything, when we're talking about odds and probabilities, which I guess is what I'm getting at, we're thinking in terms of odds and probabilities when we trade. Oftentimes, new traders and even experienced traders sometimes seem to confuse a high probability with certainty, and it's never certainty. Even with a high probability, there's the flip side of that coin. So everything that we're doing in trading, we're just simply trying to stack the deck, trying to give ourselves little bits of advantage in the marketplace. We're just trying to give ourselves a very slight edge, and it doesn't have to be significant. I mean, this is for another time, but you can have a far below 50% win rate and still be profitable. But that's a discussion for another time. But everything we're doing, we're trying to find ourselves an edge. And one of the things that we do to try to find an edge is, we can look at how things have moved presently and what their typical range is. And if it's a fraction of that typical range, it would indicate or could indicate that, hey, we've got some potential for movement here. Probably greater potential for movement in something that's moved a small percentage of its range than something that's already moved all of its range. Now, of course, there's always going to be exceptions to that. Nothing is black and white when it comes to trading. There's always going to be exceptions there because there could be a catalyst behind what drove one thing to already move its full range. It could be something as simple as that was the peak hours for whatever that instrument was, or that currency pairing was, or whatever it might be, or there could have been some news that caused it to move further. Anyway, I'm going down this whole rabbit hole. Hopefully you can take some little piece of knowledge from that and apply it to what you're doing. But long and short of it is, I'm looking over here and trying to decide, okay, what currencies are moving, which currencies do I want to consider pairing together, and then I'm looking over here and kind of weeding through that and saying, okay, well, I see some currencies moving. Of those currencies that are actually moving, which ones have not moved their full range, or have only moved a small fraction of their typical range, and then I can watch those pairings to see if we get some momentum, some divergence between strong currency, heavily buying or heavily selling of one of those two currencies that we're watching. And typically, I'd like to see both actually moving. So with that said, like right now, just as a case in point, as we come into the new session, we can see the yen has been moving to strength. It's been bought. It's been pretty heavily bought, and the Canadian has been weakening. So if we look at the currency strength of the 8 majors in relation to the 8 major currencies, the yen and the Swissy, for that matter, are both our strongest currencies, and our Canadian is the weakest currency here. Now, could I pair the CAD against the yen? So the CAD yen, they're diverging from one another. They have a big divergence. Looks great here, like, wow, that's a really big divergence. But if I go over here and I look at the CAD yen, well, it's moved 56 pips already for the day, and its typical range is 60 to 70 pips. So does that have enough to do what I would need it to do in trading that breakout strategy, the morning breakout strategy that I apply to the charts, which is available in the members area? I just simply say, hey, if I've got a currency, I'm going to click the button at the beginning of the new trading session, and it places a box around where it currently opens, and it says, hey, I'd like price to move 20 pips beyond this, and if it does, it takes profit, and if it doesn't, then I take a loss. It ratchets off risk, and there's some other pieces of it there. But my goal when I'm applying that strategy is I have to find something that has the ability to move that distance that I'm looking for things to move in order to be able to gain profit from it. So in this case, the CAD yen, while it looks great here, we see the big amounts of divergence. If I look here and I look at the CAD yen, and it's already moved 56 pips, and its average is 60 to 70 pips, does that really have the opportunity to move an additional 20 plus pips in order to get us into profit? Could it? Absolutely. But is it as likely as something that, let's say, typically moves 100 pips and has only moved 40 pips today? Which one is more likely to give me those extra 20 pips? So I'd rather say, well, this looks great over here, but maybe it's not really the best trading opportunity. So what is? What is the best trading opportunity? Where do we start looking? Well, we can go back and we can kind of scan through here. We've got the euro versus the CAD. It's moved 60 pips for the day, and its typical range is around 100 pips. Look at the 5-day to the 30-day. We're around 100 pips. Yesterday it moved 150. But we're around 100 pips for the euro. my cat's talking to me this morning. For the euro CAD. So we could look at the euro CAD. That's one to potentially be watching. The pound versus the yen. Here's another, the pound versus the yen. It's moved 60 pips and its average is around 100. Again, is there more opportunity for that to move versus the Canadian versus the CAD versus the yen? Yeah, it seems like there is. So ultimately, that's what I'm doing, right now. We're going through and just kind of looking at which currencies have that best opportunity to move. And obviously, I'd like to look at the currencies that have the best opportunity to move, but are also being actively traded right now. I would certainly favor, like a pound CAD versus a pound odd. Again, could it move? Yeah, absolutely. But the Aussie's not really being actively traded right now. I mean, it is. It's being traded because all markets are open. But the heaviest time for the Aussie to be traded is during Aussie banking hours. That's who's actually doing business in buying and selling and exchanging Aussies. More at a higher level than are occurring later in the day, right? So, we can look through here and just kind of get that idea of what it is we might want to be looking at, and then see if we get that nice burst of divergence, and if we do, that's when we'd really like to make that move. Some of the where do I live? U.S. Some of the U.S. cross pairs are can be interesting as well. Coming back over here, looking at the USD, it's been fairly flat, been weakening a little bit over the course of the morning so far, but has pushed above the midpoint coming into the new session. And especially if we see some other things happen, we might see money flowing out. And again, I don't know. We may see some money flowing out of the general market and going into cash positions. If that happens, we'll see increased buying of the USD, which will push the USD stronger in relation to other currencies. I shouldn't say will. I said will. Could push the USD stronger. There's no definitives. There's a lot of things that typically happen, and we kind of take those for granted. But there are no certainties. We can't ever. The only certain thing in trading is uncertainty. It really is what it comes down to. So anyway, some of the USD cross pairs could certainly be interesting as well. As we look at things that are occurring out there, the pound versus the USD certainly is an interesting one to be looking at right now. And it's moved 60 pips, and its average is 90 to 100. So opportunity kind of across the board as we see what's out there. All right. So let's go ahead and I think we've kind of beat that to death. Let's look. What's happening with the euro now? Euro USD not looking great. I was just seeing as the U.S. session just got underway, like literally 20 seconds ago. Looking at what's happening right now. So as we get underway here, USD has crossed above the midpoint and looking decent, against maybe the euro here. But if we look at euro USD, it's moved 75 pips, and its average is about 80 to 90. Could it get there? Yeah, I mean, it had a really big day yesterday. It moved 140 pips, but on a typical day, that's not really that's not something that's normal, right? So unless something happened with that with the news event coming up here in a bit, which are low impact. Well, they're I shouldn't say they are low impact. Again, they're labeled as low impact, but again, in combination with other things that are happening in the market, even lower medium impact news could have a big impact because it's just acting as a catalyst, right? I kind of think of the markets like we'd always talk about trading with a trend. Is it Newton's law? An object in motion tends to stay in motion unless acted on by another force, right? And that's kind of the way things go. Right? We've got kind of a trend, and it's trucking along in a certain direction. The market's moving, and the only thing that really changes it is some catalyst, right? Some outside force, and that could be news. Sometimes what would typically seem like minor news could have enough of an impact to derail that current trajectory, right? So anyway, we're getting off on tangents, but anyway, let's move on and pop over here and have a look at what's going on in the futures market. Futures market, starting with the S&P, we have a long bias in the 4-hour, which is what we had yesterday, and the 30-minute has flipped over. So for just at the end of the market session yesterday, it flipped to a long bias. It really struggled yesterday, right around this 32.18, 32.20 area. That's where it kind of spent most of the day struggling right here, and then really moved on towards the end of the session. As we've been in off hours trading, it's been floating back down and came right back to this 32.18, 32.20 area. That has been a well respected. First it was a resistance level, now it's a support level for us. As we're opening, well, not really opening, we still got an hour and a half, but coming up here in a bit, right now we've got a mixed bias again. Our 4-hour and our 30-minute are mixed, and that's telling us, hey, if we've got a mixed bias, maybe we should sit on our hands, let the market find its direction before we get too excited about trying to chase a trade somewhere. So, for the S&P, probably a good idea to sit on your hands right now. If you're looking to, kind of get into more of a well, I wouldn't even be contrarian because, we're mixed up. But if you look at the longer term trend, which is long, if you're looking and you're saying, hey man, price is getting really heavy here, I feel like, we're in a position to short this market, and you want to be a contrarian trader that goes against that longer term trend, you might be watching this 32.18, 32.20 area for breaks below here, and then short it off of that. Now, with that said, that's contrary to what we typically talk about here. I've always talked about trading with the trend, and I don't want to throw too many wrenches in the mix. I like to just focus on one thing when we're talking about something here to a wider audience, because there's so many different ways to approach the market. You've got trend trading, you've got counter trend trading, you've got intraday trading, you've got swing trading. All have different approaches that are necessary for looking at them. All have different factors to what you might want to consider when you're entering a trade. And everything we talk about during the day is intraday trading, and I feel like it's important just to have one thing and stick to it. I don't want to go down that path because I know I beat that to death all the time, but it's so important to have a plan and just stick to that plan and not be deviating. Traders want to change their systems so often to quote, I've got to change my system to be with the current market conditions. Well, how do you know what the freaking market conditions are? You don't know shit. I don't know shit. Nobody out there knows what the market condition is. It's all a hypothesis about what we think the market condition is, and that's something in our psychology that we're pushing back out to here. Sorry, going off on a soapbox, but it's just the reality of it. No one knows what the hell's going on. Everyone's just trying to justify it after the fact and give their little speeches about what they think happened and what drove it and blah, 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 but anyway, so with that said, have a plan and stick to the plan. Have a plan and stick to the damn plan. Traders always want to change their system before they really want to look at what drives their results, which is internal. It's you, it's us, it's me. Stick to our systems. That's what makes or breaks success. Anyway, so with that said, if we're sticking to a method, the method says, hey, we've got a mixed bias, 4-hour, 30-minute are mixed. Boom, don't do anything until they come into agreement with other. Coming into agreement could mean, hey, we get a big run as the U.S. session starts, and this pushes back above the midpoint. Excuse me, this pushes back above here, and we have we have agreement between the 30-minute bias and the 4-hour bias. But until that happens, it's mixed and it says sit on your hands, don't do anything. If you really want to be contrarian to the overall larger term trend, find a level like this 32.18, 32.20 area and short it from there. But be prepared to be wrong. Be prepared that this market could just open up and blast right through 32.45 and just laugh as it keeps going to 3,300 and beyond. Be prepared for that. Have a stop loss. Be prepared that you could be wrong. And that's the same, even if you're trading with the trend, we always have to be prepared to be wrong. Defense first, defense before offense. But if you are looking for a level to trade from, 32.18, 32.20, very solid level that's been holding up for days now. So could be getting ready to break it. Who knows? But the system, using the 4-hour bias, 30-minute bias for confirmation, says sit on your hands. All right. Anyway, I beat that to death. Crude. What's going on in crude? Well, we've still got a long bias. 4-hour bias is long. 30-minute bias is long as well. Been one hell of a run from 6. All right. It was 6. Crude was 6. what, month and a half ago? Anyway, one hell of a run, and not really showing signs of slowing down. Again, depending on what comes out of news, there could be a catalyst, and if it looks like, well, anyway, let's just leave it at that. 4-hour bias is long, 30-minute bias is long. So what are we looking at here? Well, we'd be looking for long trading opportunities in the form of one of two things. Either A, we could watch for a break of this 4160, which is a pretty key level. We can see right across here in the 30-minute. It's been rejected off of that, which was a resistance level. Finally broke it, support, broke back through it, resistance again. So 4160 would be a great level to look for a breakout. So if we're looking for some momentum and a break, we could look for a break of 4160 to go long. That's a potential opportunity, potential idea. The other way to trade it would be to wait for a pullback. The next level down here would be this 4120 or even 41. So we could look for a pullback to 4120 or 41 and then wait and then go long off of a bounce. So we can always look for breaks or we can look for bounces. And then of course there's the method that we use quite a bit in the S&P, gold, other places, which is simply watching for price to start making lower highs, lower lows in an uptrend, and as long as our moving average doesn't cross, then we would look to buy on a break of a previously closed lower high and our stop loss at that previously closed lower low. So a lot of different ways to approach it. If in any of those methods, they're all discussed in various videos here, through the Facebook and the Facebook. they're all discussed in videos here on Facebook or in the members area as well. So there's different ways to approaching the market. Just pick one and stick to it. And that's the biggest thing. So here we'd be looking for long trading opportunities, and we talked about some levels there that we'd approach in crude. And then of course on gold continues to be in a big bullish move here. Nice big bull move on gold. So the 4 hours long, 30-minute is still long presently. However, it has experienced a bit of a pullback this morning as it made a run above 1970 here. So what are we looking at in gold? Well, as long as this holds up and our 30-minute bias stays in a long bias that agrees with the 4 hour, we'd be looking for buying opportunities. And we could look for a couple of things. 1930, we can see 1930 here was resistance. It broke it, support, came back as it pulled down. Even yesterday, we saw support off of 1930. So, a break of 1930 would be a great spot to look for a potential buy order. If you're looking on a breakout level, we could breaks above 1930, or if you're a pullback person, 1900, big whole number, very well documented levels of support here as well. So coming back towards 1900, 1910, great spot to look for potential buying opportunity there. So I think that's it. I think we've hit it all. The biggest thing is just, God, I know I sound like a broken record, but have a plan and stick to your plan. The biggest thing you can do, the biggest favor you can do to yourself, isn't trying to figure out what the market's going to do next and what the drivers are and why this did that yesterday and why this did that the day before and why. I guess whys are they honestly they don't matter. It's fun to come up with hypotheses about what happened in the market and talk to friends and family and have that conjecture about what's driving the market and where it's going. But when you actually come to sit down here in the marketplace and trade, you've got to have a plan, and that plan should be thought out in advance, not on the fly as the market's moving. Because again, that's one of the I say again a lot, but that's one of the things that's the biggest challenges with the market. The market's always moving, and at any moment, any given moment, we can justify ourselves into a trade. If you don't have a plan ahead of time, you're going to find a reason to do something, and it probably won't be in your best interest. So, have a plan and stick to the plan. Have a plan, stick to the plan. All right, that's all you can really do. And if things aren't working out, look at the plan, and because obviously if you've got a plan, you've done some level of back testing on it and also some level of forward testing. And then look internally. Are you actually sticking to the plan? Because typically the problems occur when you start breaking the rules. Well, it was kind of there, you know. The 4-hour bias was long and the 30-minute bias was mixed, but I just really thought it was gonna go shorter. So, you know, even though my plan said I need to have these in agreement with one another, it looked like a really strong market for me to do this. So you did something and it wasn't really the plan. You know, so the biggest thing is documenting, you know, have the plan, stick to the plan, document what you're doing, and then go back and revisit it afterwards and see what's actually not working. Is it you? Look internally. Is it me, or is it the plan? Which really is it? And again, one data point doesn't make it. A lot of people, you know, after they get, you know, a couple of losses, flip out and feel like the plan's not working. But losses are part of trading. You've got to learn to take a loss. So again, what's really the problem? You know, is it because you had a couple of losses that you've already identified are part of the plan, but psychologically you can't handle it, so you start deviating from the plan? Is it you or the plan? Typically it's you, meaning it's, you know, any of us, right? Looking internally at ourselves when we're trading. So anyway, that's it. I think I've kind of beat all the subjects to death today, and hopefully you guys just keep rolling forward. We've got some pretty cool key levels to trade from. Potentially here in the futures market. I've got some ideas to look at there in the forex market. Do be careful around the news today, even though it's listed as low and medium impact. Be aware that just given the current condition of the market and just how things have been acting over the last week at this point, we've been kind of stuck at a certain level. I mean, obviously we've broken above it, we've broken below it, but we've kind of been hanging at this certain level for over a week now. Who knows where it goes from here? This could be just a time to kind of reaccumulate and it bursts higher. It could be the time that the bottom starts to fall out and it goes lower. No one really knows. Okay, I gotta reiterate that no one knows, no matter how credentialed they are and what time slot they're in on your favorite news channel or how well written their articles are. They don't know. You know, all you can do is stick to your plan. So that's it. Bye. Have a great day.